We've seen incredibly low inventories this season. Obviously, there's been so many disruptions in supply chain, and what we're hearing, particularly out of China right now, we expect that to kind of increase again as we go into 2022. Unfortunately, packages are moving though. However, customers are paying a lot more to get them to their doorsteps. So we've got inflation, we've got cost of moving stuff around going up, and we've got low inventories, which, interesting at the end of the day, actually retail and brand margins are higher than they have ever been because of price increases and because there's no discounts in the marketplace, as I'm sure you've noticed, trying to shop into the holidays.
That lack of promotions, something interesting. I hadn't thought of it until reading your latest research that you actually aren't seeing a lot of promotional activity. Many things are still at full price and higher than they were last year. Is that going to continue into 2022? I mean, we're looking at a U.S. consumer that's in arguably a worse position. They don't have those stimulus checks in their pockets. What can we expect on the pricing front next year?
Well, that's all true. So this, in the past year, we saw free money, we saw pent-up demand. As we go into 2022, perhaps inventories normalize toward the end of the year. So retailers buy a lot more, planning for bigger demand. And, we end up in a situation where there's discounting comes back. This has been an incredibly unusual year, operating margins at an absolute peak because so little discounting in the market. An interesting stat Nike talked about, Black Friday was very alive and well this year, despite the headlines, except most things were full price. Their business was up 20% over Black Friday in Europe and the US, and there were not a lot of discounts. So I think this year has shown us that consumers will pay full price when the product is compelling.
Do you think that's going to hold true next year, I guess, is the big question, especially when you look at some of these stocks that have pulled back because, expectations have moderated, earnings forecasts have moderated somewhat. But is that going to hold up, that strategy?
So I think, unfortunately, that retailers and brands sometimes fall back into old habits, which is it's tough to plan. You're in the planning business and it's tough. Lead times have gotten shorter. Retailers have gotten more efficient and a lot smarter over the past 2 years. However, if we end up in a situation where inventories are normalized and come up and the demand doesn't quite follow through, as we've seen it in the past 6 months, then we do end up in a situation where operating margins come down. For some of these brands like a Ralph Lauren, their average selling prices are up 50% over 2 years. So at some point, those have to normalize if we need some incentives to come back into the market to stimulate demand. So I expect that at the end of next year.